Welcome to the illuminating world of renewable energy investments, the future of finance. As we stand on the cusp of an energy revolution, a shift from fossil fuels to renewable energy sources is not only an environmental imperative, but also a financial one. Renewable energy, which includes sources like wind, solar, hydro, and geothermal, is becoming an increasingly important player in the global energy mix. With the world's energy needs growing by the day, renewable energy offers a sustainable and eco-friendly solution. But it's not just about saving the planet, there's a compelling financial story here as well. Over the last decade, we've seen a significant rise in renewable energy investments. This surge is driven by a combination of technological advancements, regulatory support, and growing awareness about climate change. As a result, renewable energy has become one of the fastest growing sectors in the global economy. Investments in this sector are aimed at developing, producing, and distributing renewable energy, and they come in various forms, including stocks, bonds, funds, and direct project investments. The potential for growth in renewable energy investments is vast. The International Energy Agency estimates that the world will need to invest about $7 trillion in renewable energy over the next 2 decades to meet climate targets. That's a staggering figure, and it represents a massive opportunity for investors. But investing in renewable energy is not just about tapping into this growth potential. It's also about aligning your investments with a sustainable and resilient future. By investing in renewable energy, you're not just putting your money to work. You're also contributing to the fight against climate change and helping to build a sustainable energy future. So, as we delve deeper into this topic, remember that renewable energy investments are not just about the numbers, they're also about making a positive impact on the world. Indeed, investing in renewable energy is not only about financial gain, but it's also about contributing to a sustainable future. As we delve deeper, it becomes clear why renewable energy holds such significance in our world today. Indeed, the importance of renewable energy is multifaceted, touching on both environmental and economic aspects. The environmental benefits of renewable energy are crucial in the battle against climate change. Our planet is in a precarious state. With rising global temperatures, melting ice caps, and more frequent extreme weather events, the urgency to shift from carbon-intensive energy sources to cleaner, renewable ones could not be more evident. Renewable energy sources like wind, solar, and hydropower emit little to no greenhouse gases during operation, making them a key part of the solution to our climate crisis. Moreover, renewable energy can reduce our dependence on fossil fuels. These non-renewable resources are finite, and as they become scarcer, they will undoubtedly become more expensive. Transitioning to renewable energy sources provides us with a more sustainable and self-reliant energy future, safeguarding us from the volatility of fossil fuel prices and supply disruptions. But the importance of renewable energy extends beyond the environment. From an economic perspective, the renewable energy sector is a significant driver of job creation. The process of building, installing, and maintaining renewable energy infrastructure requires skilled labor, creating a multitude of job opportunities across the globe. Furthermore, the cost of renewable energy has been falling rapidly over the past few decades, making it increasingly competitive with traditional energy sources. As technology continues to advance, this trend is expected to continue, providing consumers with more affordable energy options and stimulating economic growth. Renewable energy also offers a pathway towards energy independence for many countries. By harnessing the power of the sun, wind, or water within their borders, nations can reduce their reliance on imported fuels, strengthening their energy security and economic stability. Clearly, renewable energy is not just a trend, but a necessity for our planet and our economy. Its importance is not only recognized by environmentalists, but also by economists, policymakers, and business leaders worldwide. As we move forward, the role of renewable energy will only continue to grow, shaping our world in ways we are only beginning to comprehend. Now let's turn our attention to the financial potential of renewable energy. The renewable energy sector is growing at a remarkable pace. By 2023, the global market for renewable energy is estimated to be worth over $2 trillion. Yes, you heard that right, $2 trillion. This growth is not just impressive, it's unprecedented. It's outpacing traditional energy sectors and showing no signs of slowing down. So, what's driving this phenomenal growth? A combination of factors, really. One key driver is government incentives. Governments around the world are setting ambitious renewable energy targets and offering incentives to meet them. These incentives are encouraging both public and private sector investment, thereby fueling the growth of the sector. Another driver is technological advancements. The technology behind renewable energy has come a long way. We're seeing more efficient solar panels, wind turbines, and batteries. These advancements are making renewable energy more cost-effective and accessible, further propelling its growth. Let's not forget the increasing demand for clean energy. As the world becomes more conscious of the impacts of climate change, the demand for sustainable, clean energy is soaring. This demand is expected to continue to rise, making renewable energy a highly attractive investment. But it's not just about the growth potential. The renewable energy sector also offers diversification benefits. It's a different asset class that can provide a hedge against traditional energy investments. This makes it a valuable addition to any investment portfolio. Moreover, renewable energy investments can generate stable, long-term returns. These returns are often backed by long-term power purchase agreements, providing investors with a steady stream of income over a long period. So, with all these factors combined, it's no surprise that the renewable energy sector is attracting a wealth of investment. From institutional investors to individual retail investors, everyone's starting to recognize the financial potential of renewable energy. The numbers speak for themselves. Renewable energy investments present a promising financial opportunity. There are various ways to invest in renewable energy. Let's explore some of the most popular ones. First up, we have stocks. When you buy a stock, you're buying a slice of ownership in a company. Investing in renewable energy stocks means buying shares in companies that are engaged in the generation and distribution of renewable energy. These may include solar panel manufacturers, wind turbine producers, or biofuel firms. The potential upside of stocks is high, as you stand to gain significantly if the company performs well. However, stocks also carry a high degree of risk. If the company struggles or the sector faces a downturn, the value of your investment could plummet. Then there are bonds. Renewable energy bonds are essentially loans that investors make to renewable energy companies. In return for your investment, the company promises to pay you back with interest over a certain period. The main advantage of bonds is their relative safety. Unlike stocks, where your return depends on the company's performance, bonds offer a fixed return, but on the flip side, the potential for high returns is limited with bonds. Next, let's talk about exchange-traded funds, or ETFs. An ETF is a type of investment fund that's traded on stock exchanges, much like individual stocks. A renewable energy ETF allows you to invest in a broad range of companies within the renewable energy sector. This gives you exposure to the sector without the need to pick and choose individual stocks. ETFs are generally less risky than individual stocks because they're more diversified. However, like stocks, the value of your investment can fluctuate with market conditions. Lastly, we have mutual funds. A renewable energy mutual fund is a professionally managed investment fund that pools money from many investors to invest in a portfolio of renewable energy stocks, bonds, or other assets. Mutual funds offer professional management and diversification, similar to ETFs. But unlike ETFs, which can be traded throughout the day, mutual funds are only priced at the end of the trading day. This means you can't take advantage of intraday price movements. Each of these investment types has its own set of advantages and disadvantages. Stocks offer high potential returns but also high risk. Bonds offer safety but limited returns. ETFs offer diversification and flexibility but are subject to market volatility. And mutual funds offer professional management and diversification but lack the flexibility of ETFs. By understanding these investment types, you can choose the one that best aligns with your financial goals and risk tolerance. Like any investment, renewable energy also comes with its own set of risks and challenges. Let's begin with policy changes. Governments globally are pushing for clean energy, but policies can change as quickly as the wind blows. A sudden shift in governmental priorities can lead to a sudden withdrawal of subsidies or tax breaks that were previously beneficial to renewable energy investments. This can impact the profitability of such investments and, in some cases, even lead to losses. Next, let's talk about technological risks. Renewable energy is a sector that relies heavily on advancing technology. The efficiency of solar panels, wind turbines, and other renewable sources is constantly improving. However, these advances can also render existing technology obsolete, leading to potential losses for those who have invested in older, less efficient technologies. It's a bit like buying the latest smartphone, only to find out a new model is being released next month. Market volatility is another significant challenge. Renewable energy, like other sectors, is not immune to the ups and downs of the global economy. Economic downturns can lead to reduced demand for energy and lower prices, impacting the returns on renewable energy investments. Furthermore, renewable energy sources such as wind and solar are dependent on environmental conditions. A particularly cloudy year or a period of low wind could reduce energy production and affect the returns on your investment. Lastly, there's the risk of project execution. Building a wind farm or a solar power plant is a complex project that requires significant planning and management. Delays, cost overruns, or technical issues can all impact the profitability of these projects. Understanding these risks is crucial, but remember, risk is inherent in any investment. The key is to understand these risks, weigh them against the potential returns, and make informed decisions. Being aware of these risks allows you to make informed investment decisions in the renewable energy sector. To fully grasp the potential of renewable energy investments, let's look at some successful case studies. First on our list is NextEra Energy. This Florida-based company is the world's largest generator of renewable energy from the wind and sun. NextEra Energy has built its success on a clear strategy and a strong commitment to renewable energy. Their approach has been to invest heavily in wind and solar power, which has paid off handsomely. As of 2024, NextEra Energy has a market capitalization of over $100 billion and is a leading player in the renewable energy sector. NextEra's success can be attributed to their strategic investments in renewable energy infrastructure. They recognized early on that renewable energy sources like wind and solar were not just environmentally friendly, but also economically viable. By investing in these technologies, they were able to capitalize on the growing demand for clean energy and achieve impressive returns. The second case study is Ørsted, a Danish company that has transformed itself from a fossil fuel-based utility to a global leader in offshore wind power. Ørsted's journey began in 2009, when they made the strategic decision to shift their focus towards renewable energy. This was a bold move, but it proved to be a wise one. Today, Ørsted is a global powerhouse in offshore wind energy, with operations in Europe, Asia, and North America. Ørsted's success story is a testament to the transformative power of renewable energy investments. The company's strategic shift towards renewables has not only helped it become more sustainable, but it has also driven strong financial performance. Ørsted's market capitalization has grown significantly since it began its renewable energy journey, and it is now one of the largest energy companies in Europe. Our third case study brings us to Tesla, the American electric vehicle and clean energy company. Tesla's success in the renewable energy sector is well known, but it's worth highlighting how strategic investments have played a key role in their story. Tesla's investment in battery technology has been particularly significant. By developing advanced battery technologies, Tesla has been able to drive down the cost of electric vehicles and make them more accessible to consumers. Tesla's investments in renewable energy have not only transformed the automotive industry, but they have also delivered substantial returns for investors. Tesla's market capitalization has surged in recent years, reaching over $700 billion in 2024. This makes Tesla one of the most valuable companies in the world and a shining example of the financial potential of renewable energy investments. Lastly, we look at First Solar, an American manufacturer of solar panels. First Solar's success can be attributed to their commitment to innovation and their strategic investments in manufacturing capacity. By continuously investing in their production capabilities, First Solar has been able to scale up their operations and become one of the largest solar panel manufacturers in the world. First Solar's approach illustrates how strategic investments in renewable energy can lead to significant business growth. Today, First Solar is a leading player in the global solar industry with a market capitalization of over $10 billion. These case studies illustrate how strategic investments in renewable energy can yield significant returns. Each of these companies understood the potential of renewable energy and made strategic investments to capitalize on it. Their success shows that investing in renewable energy is not just good for the planet, but it can also be good for your wallet. Whether it's investing in renewable energy infrastructure, developing new technologies, or scaling up production capabilities, these case studies show that there are many ways to achieve success in the renewable energy sector. Now that we've covered the basics, you might be wondering how to start investing in renewable energy. First things first, you need to conduct thorough research. The renewable energy sector is vast, encompassing various types of energy sources such as solar, wind, hydropower, and biomass, among others. Each of these sources has its own unique characteristics, market dynamics, and growth potential. Therefore, it's crucial to understand these aspects before making an investment decision. You should also consider the geographical location, as the profitability of certain renewable energy sources can depend heavily on the natural resources available in a specific region. Once you've conducted your research, the next step is to choose the right type of investment. There are several ways to invest in renewable energy. You can buy stocks of companies operating in this sector, invest in exchange-traded funds or mutual funds that focus on renewable energy, or even invest directly in renewable energy projects through crowdfunding platforms. Each of these options has its own risk and return profile, so choose the one that best aligns with your investment goals and risk tolerance. After you've chosen the type of investment, it's time to make your move. If you're investing in stocks or funds, you can do this through a brokerage account. If you're investing directly in projects, you'll need to go through the platform's investment process. Remember, investing is not a one-time event. It's a long-term commitment that requires regular monitoring and management. Monitoring your investment is essential to ensure it's performing as expected and to identify any potential issues early on. This involves keeping up to date with the latest news and developments in the renewable energy sector, as well as the specific company or project you've invested in. If you've invested in stocks or funds, you should also regularly review your portfolio to ensure it remains balanced and aligned with your investment goals. Managing your investment, on the other hand, involves making decisions based on the information you've gathered through monitoring. This could involve deciding to sell your investment if it's not performing well, or to buy more if it's doing exceptionally well. You might also need to rebalance your portfolio from time to time to maintain your desired level of risk and return. Investing in renewable energy can be a rewarding journey, both financially and ethically. Not only can you potentially earn a good return on your investment, but you're also contributing to a sustainable future by supporting the transition to cleaner, greener energy sources. With these steps, you're well on your way to making your first renewable energy investment. As we look ahead, the future of renewable energy investment seems bright. Renewable energy is not just a fleeting trend, it's a rapidly growing sector that's poised to reshape our energy landscape. In the coming years, we expect to see several key trends emerge in the renewable energy investment space. Firstly, technology advancements are set to drive down costs. As technologies mature, economies of scale will kick in, making renewable energy even more cost competitive with traditional energy sources. This is likely to spur further investment and growth in the sector. Secondly, we anticipate an increased focus on energy storage solutions. As the grid shifts towards intermittent renewable sources like wind and solar, the importance of energy storage rises. Investments in storage technologies such as batteries and pumped hydro can provide significant returns. Thirdly, we should also keep an eye on the growing role of green hydrogen. Produced from renewable energy sources, green hydrogen could serve as a versatile energy carrier and storage medium. It has the potential to decarbonize sectors that are hard to electrify, such as aviation and heavy industry. This could unlock new investment opportunities. Another trend to watch is the rise of ESG investing. Environmental, social, and governance factors are becoming increasingly important in investment decisions. Companies that align with these values are likely to attract more investment. Finally, policy support will continue to be a key driver for renewable energy investments. Governments around the world are setting ambitious climate targets, and renewable energy will play a crucial role in achieving them. This could lead to favorable policies and incentives, encouraging further investment in the sector. These trends are expected to shape the future of renewable energy investments, influencing investment strategies and opening up new opportunities. The renewable energy sector is dynamic and evolving, and investors who understand these trends can position themselves to capitalize on them. As the renewable energy sector continues to evolve, so do the opportunities for investment. In conclusion, investing in renewable energy offers both financial rewards and environmental benefits. We have explored this fascinating intersection of finance and sustainability in depth throughout our discussion, painting a vivid picture of the potential that lies within. Let's take a moment to revisit some of the key points we've touched upon. First, we delved into the importance of renewable energy, a sector that is rapidly becoming integral to our global economy. We highlighted its role in mitigating climate change and its potential to generate substantial returns for savvy investors. Next, we introduced the concept of renewable energy investments, exploring various avenues such as solar, wind, and hydroelectric power. We also emphasized the importance of understanding the risks and challenges associated with these investments. Just like any other investment, renewable energy also comes with its share of risks. However, we also emphasized that with the right knowledge and strategy, these risks can be effectively managed. We then moved on to real-world examples, case studies that showcased how successful renewable energy investments have yielded significant returns. These stories provided tangible evidence of the financial potential within this sector, demonstrating that investing in renewable energy can indeed be a profitable venture. Finally, we provided actionable steps on how to start investing in renewable energy, with an emphasis on thorough research and informed decision-making. We wrapped up with a forward-looking discussion on the future of renewable energy investments, a future that is looking increasingly bright and promising. As we wrap up our journey, it's important to remember that investing in renewable energy is about more than just potential financial returns. It's about contributing to a sustainable future, about making a positive impact on our planet, while also securing your financial future. It's about realizing that the future of finance lies in sustainability and that the time to act is now. Investing in renewable energy is not just about securing your financial future, but also about contributing to a sustainable future for our planet.